Fundrise has been revolutionizing real estate investing through its unique program called the Fundrise IPO. For those who are unfamiliar with Fundrise IPO, it is not your traditional type of IPO they're used to in the stock market. In fact, it doesn't even stand for Initial Public Offering. In this case, Fundrise IPO stands for Internet Public Offering. And the value of this offering ultimately depends on how Fundrise is doing as a company, rather than the e-REITs and e-funds that they offer through their investments. In this video, I will briefly explain what is Fundrise IPO, how it differs from a traditional IPO, how has Fundrise grown as a company, and when will we finally be able to cash in on this once-in-a-lifetime investment opportunity. Coming up. If you're new to the channel, hello, my name is Trey and I invest in stocks, crypto, and real estate. If you found this video helpful, please check out my entire Fundrise playlist linked in the description below. It has everything you need to know before, during, and after investing with Fundrise. Plus, it also has 2 videos which goes into more detail about the Fundrise IPO and actually a possible date when Fundrise may go public. Now, let's get started. Fundrise IPO stands for Internet Public Offering. Using this program, Fundrise allows its current retail investors to own shares of a private company by the name of Rise Companies Corp, which is a parent company of Fundrise. This concept is changing the industry in the sense that current industry standard for a traditional IPO, which stands for Initial Public Offering, is not to allow individual retail investors like you and me to have a chance at purchasing shares of private company. In a traditional IPO, when a company decides to go public, they hire a salesman, so to speak, who then visits multiple large corporations and institutional investors and offers them shares of this company at a discounted price. Now, these corporations and investors have millions or even billions of dollars to invest, and that is why closing just a few deals for these salesmen is considered a win. Then, when the company becomes a publicly traded company, the price that we see on Robinhood on the first day of trading is usually much higher than what these institutional investors were offered. And this is usually due to increased advertising and hype generated to increase the share price. Now, after a lockup period, which is the number of days that these institutional investors cannot sell their shares, which is usually between 90 and 180 days, these investors start selling their millions or even billions of dollars of shares, therefore tanking the price of the stock and leaving us, the small retail investors, holding the bags. When some of these IPO companies were asked why are they not interested in letting retail investors be part of their early offering, the answer was simple yet shocking. They stated that most retail investors are only able to invest $1,000 or less. And it is just simply not worth the time to raise the needed money to go public with such small amount increments. As opposed to institutional investors who have millions and billions in their disposal. So simply put, we are just not worth the time. This type of attitude is where Fundrise found an opportunity. Fundrise is changing all this and disrupting the industry standard. Fundrise is currently offering shares of its private parent company to anyone who is currently investing at least $1,000 with them. That means you and me can get into this company before it becomes publicly traded and available to the masses. The shares are offered once or twice a year, and as can be seen on this chart, the price per share has been rising since 2017. Now, the price per share increases as the company expands its operations and grows. Since the program inception in 2017, there has been 162% growth. Current offering price per share is at around $13. Now, considering the valuations that companies receive these days and the multiples at which their shares are priced at, I believe that if Fundrise was to go public right now, it would be offered at around $37 per share. That's not a bad 3x return. Let's take a minute and see how Fundrise has grown as a company in the past 2 years. Now, I'm using just past 2 years because that is when the data became widely available. Here's the chart showing the growth throughout the 2020. Now, remember that the 2020 is when the COVID-19 pandemic began. So these numbers are actually incredible considering the circumstances. Now, as can be seen in this chart, the assets under management have grown by 36.3% in just 1 year. The number of active investors has grown by over 21% in just 1 year. And the number of employees has grown by 17.2% in just 1 year. Now, this is the exact same chart just for the year of 2021. Look at this growth. Assets under management has grown over 79.1%. Active investor number has grown by 46.7%. And check this, the number of employees has almost doubled at 90.6% in just 1 year. Now, if this doesn't tell you how fast this company is growing and what exactly is the potential of this company 5 and 10 years down the line, I don't know what will. As you can see, the growth of the company is directly correlated with growth in price per share of the Fundrise IPO. When you put money into the Fundrise IPO, you're giving money to Fundrise to hire more employees, to increase the assets, and advertise in order to reach new investors. Now, in the year-end letter of 2021, the CEO of Fundrise has stated that unfortunately Fundrise will not be going public in 2022. However, he stated that the company has grown in the past 24 months as much as it did in the previous 7 years before that. So the CEO Ben is using a type of language which essentially makes me feel like Fundrise will be going public before year of 2025. But we will just have to wait and see what happens. Now, before we end, I want to go over a relatively recent traditional IPO and show you exactly how it plays out much of the time and how it would compare to a Fundrise IPO. Alright guys, so I want to go over a recent traditional IPO of a company called Petco. The ticker is WOOF, W-O-O-F. Now, let's take a look at the chart. Once again, this was a traditional IPO, therefore retail investors like you and me were not allowed to buy shares of this stock, of this company, until it went public on exchanges like Robinhood. So the company went public on January 14th of 2021, so about a year ago. So as you can see, it went public at a price of around $26. And as you can see, on day one, it literally pumped all the way to $31. If we actually measure the percentage that it went up just in 1 day, it's about 20%, which is a crazy amount of return. Now, what happens in a traditional IPO, guys, is that those institutional investors and corporations that I told you about that get a chance at purchasing these shares of these companies at a discounted rate, they actually get in, let's say, 6 months before the IPO. So they get in somewhere here where the mouse cursor is on the left side before the company becomes public. Now, the salesman goes to these institutional investors and tell them, hey, if you buy $10 million worth of shares of this company, we will give it to you, let's say, at $20 per share or $15 per share. And they agree on a certain price and they purchase these crazy amounts of shares. So what happens then as the time goes on, they get more and more funding, more and more money for the company to go public. And when it comes a day to go public, maybe a week before that or 2 weeks before that, they start advertising and create hype around the stock. So instead of going public at a price that these institutional investors got, it gets so hyped up that it gets listed for $26 instead of the $15 that these institutional investors and corporations were offered. So as you can see then, on day one, it pumps because everyone is so excited about this company. The retail investors, the new investors are so excited. They go to Petco every single day to buy food for their dogs. So they're like, this is a good company. Let me get in on it. And they do get in on it. And that is why we see this huge green candle. However, all those institutional investors that invested 6 months or a year before that, they say, hey, we know what the value of this company actually is, and we're going to start selling. We're going to start taking our profits. So what happens here is, as you could see, the stock literally goes all the way down. So if you measure it from the top of day one to just about 2 or 3 months later, the stock lost almost 43% of its value. Now, sometimes there's a lock-up period where these investors cannot sell, and sometimes there isn't. Sometimes the lock-up period could be 90 days. Sometimes the lock-up period could be 30 days. Sometimes there's no lock-up period. So in this case, in terms of Petco, it looks like there wasn't much of a lockup period, or maybe some of the institutional investors were able to sell right away. So this is what's happening here. The institutional investors are selling, and the retail investors that bought on day 1, 2, 3, or 4 are stuck holding the bags. So this is the decline that we see. Now, then the stock market hits a price of $17.87. Now, this is likely the price, the first bounce after an IPO is likely the price, which is the actual value of this, is an actual fair value of the price for the stock, right? So again, in this case, institutional investors see that, hey, this is a good price now. Let's get back in. So as you could see, again, at this point, there's a huge bounce. There's a hammer candlestick there, which is a very popular, like these 3 candlesticks here that you could see, are a very popular reverse sequence. So when you see a red candlestick and then a hammer candlestick and then a green candlestick that is higher than the red candlestick before that, that usually means a reverse is coming. So again, it goes all the way up here. And I can actually draw it for you guys. We're going to just draw a trend line. So it goes from here, again, all the way to up here. And again, at this point, it's been about 90 to 180 days. And some of the institutional investors who were previously locked out of selling at a profit, they see that the price has reached a decent high level again, and now they're free to sell, and they sell it again, and the price again tanks to about $18 or $17. As you could see, then it goes up, and then it goes down again, and this keeps on happening. So as you could see, if you just draw, I drew here a trend line, as you could see, there's lower highs happening. There's one here, there's one here, there's one here, one here. And if I move this over right now, the actual price of the stock right now is pretty much fluctuating between $17 and $20. So that is a fair price for this stock, which is about the price at which institutional investors got the offer. Us retail investors, we most likely bought into the hype up here, got dumped on, and then institutional investors wanting to pump their bags before their lockup period expires, they artificially increase the price, generating more hype. And then so us retail investors, we see that it's pumping again, we buy in more. Once it reaches a certain amount and a lockup period expires for the institutional investors, they dump on us yet again. So again, guys, this chart shows precisely how bad traditional IPOs are for us, the retail investors, because most of the time we're going to get stuck holding the bags. We buy into the hype while institutional investors and corporations take our money. Now, if theoretically Fundrise was to go public, at the stage that we're in right now, you're able to buy nice and early the shares of the Fundrise IPO. That means you're getting in at the ground floor. When Fundrise will go public, and they will go public, it's just a matter of when, there will be advertising, there will be increased amounts of hype and attention to the stock. Therefore, they will be listed again at a higher price, and hopefully us as early investors, we will be able to reap the rewards by selling hopefully on day one and taking the rewards for believing in this company for a long period of time. So we will be getting in down here, selling on day one or at least the first week, and then trying to get in at a lower price than what it was launched at. Now guys, I hope you found this video helpful. Thank you so much for watching. Don't forget to click that like and subscribe button. I have a question for you. When do you think Fundrise will go public? Is it worth investing in Fundrise IPO? And what price do you think Fundrise will start trading? Now guys, thank you so much for watching. Don't forget to click that like and subscribe button. I greatly appreciate it. Check out my entire Fundrise playlist down in the description below. And I will see you in the next video. Take care.